Australian house prices have seen their biggest monthly increase in more than 2 years, with Sydney and Melbourne boasting huge jumps in sales. The bounce marks an end to 2 years of constant decline. Joining us now, Tim Reardon, principal economist at the Housing Industry Association. Tim, good morning to you. So if these reports are to be believed, is the housing crisis over and the spike is heading upwards again?
Well, I'm not sure we're ever in a crisis. We had a little bit of a house price correction there for a while, and yes, house prices in Sydney and Melbourne popped. There's no other way to describe it. 1.6% up for the month is really a very strong month. 1.4% in Melbourne, the strongest for a couple of years as well. So we're hopeful that what happens in this phase of the cycle is that people have been holding back from putting their houses on the market. They've seen house prices come off in Sydney and Melbourne. So the next phase between now and Christmas is that as people see that house prices are moving forward again, that we see more houses come on the market, and that keeps a lid on those house price rises, because certainly 1.6% per month is not an outcome we want to see. And the other factor behind that is that we still have a large number of new homes coming onto the market, ones that were started a year ago, particularly on the apartment side of the market. There's still a record volume of new homes coming onto the market there. So that'll help keep a lid on that house price growth, because we certainly don't want to see it getting away and seeing that 17.5% increase in house prices per year. That's an undesirable outcome.
It was a bit more significant than a correction, wasn't it? I mean, there was a fairly decent slump, wouldn't you have thought, for at least a good 2 years?
18 months, we'll haggle over that, but we saw 7.5% increase in 1 year in 2015, and we've seen at most just under a 14% correction over the past 18 months. At its core, it is a supply and demand equation. We saw for 20 years an undersupply of homes, particularly in Sydney. Then for the last 5 years, we've seen an oversupply of homes, which has corrected that house price. Now that market's coming back into equilibrium. So we've seen the building industry supply more homes than what were required to meet growing population needs in Sydney and Melbourne. So, I mean, and now that's coming back into balance.
Yeah, there's no doubting the figures that came out from the last couple of weekends anyway. The auction clearance rates, especially out of Sydney and Melbourne, were very much in the positive. You'll have more specific figures than me, but I think it was the high 70s, low 80s. What about apartments? I mean, are they going to be as strong as new house sales?
I wouldn't expect so, and so we're seeing that boom cycle of apartments come to its natural conclusion in Sydney and Melbourne. Brisbane is certainly well ahead of that cycle. They're probably 2 years ahead of Sydney and Melbourne, and we'll probably start to see an apartment cycle start in Brisbane sometime in about 18 months' time as demand there for apartments grows again. But for Sydney and Melbourne, yes, that cycle, there has been very strong demand for apartments, but at this point in the cycle, that demand will start to slide. We've seen foreign investors exit the market, and at this stage they're not returning. Hopefully that house price gain again will see them return, but there is an enormous supply of new apartments coming onto the market, and so that will keep a lid on house price growth, and we're not likely to see the next phase of investment in apartments. So we're not going to see an increase in construction of apartments until the current suite of apartments are completed and sold. We did mention that the auction clearance rates were doing very well in Melbourne and Sydney. What about the other cities? You know, are they doing as well? Are the expectations that they would be as strong? Yeah, so the other cities, Adelaide is plugging along in a very solid, mature market. Perth is very slowly recovering, and it's one to watch that at some stage they can't continue to create new jobs, they can't continue to grow and not see an increase in house prices. So that market has to turn at some point in the time. Brisbane has been very sluggish, and that partly reflects the volume of apartments that were completed a couple of years ago and have been slowly clearing the market. But with population growth and employment growth in the southeast corner being quite strong, then that market will pick up and move along as well. Hobart has been exceptionally strong, and it's probably just coming to the end of that little bit of a micro boom that they had out of cycle to all other jurisdictions, and they'll track back to what's a more average rate of growth, a more average rate of home building in Tasmania.
Right. Tim Reardon, the principal economist at the Housing Industry Association, thanks very much for your time this morning.